have also started people, instead of focusing on how much do you want to spend in OpEx, how much do you want to spend therapist pay, ultimately, the philosophy I've tried to adopt is that the business is supposed to fulfill the owner. If you're not fulfilled, if you're not paid, if your take-home pay is not going to be where it is at, then ultimately you're not going to get far. You're going to burn out. You're going to be stressed. You're not going to be able to put forth the best you for everybody around you, which doesn't serve you, it doesn't serve your community. So I actually have people do the lifestyle worksheet post actually figuring out your caps. Like, what do you need to pay yourself to be fulfilled? How are we going to get there? And I will start with the taps for the owner's pay piece first and say, okay, if you want to pay yourself this much, this is how much we got left to work with. Here's your boundaries.
Ooh. You didn't start your practice to barely hang on. I'll guess you started it for freedom, impact, and profit. This is Therapy for Your Money. I'm your host, Julie Harris. I'm an accountant, author of Profit First for Therapists, and CEO of Green Oak Accounting. Over the years, my team and I have partnered with hundreds of private practice owners, whether they're just getting started, scaling into thriving groups, or even preparing to sell. We've seen it all, and we know exactly what makes a practice tick financially. On Therapy for Your Money, I'll help you build a business that truly works for you. You'll get quick, actionable tips and episodes so that you can grow a profitable practice, increase your financial confidence, and pay yourself unapologetically. Because your work is way too important for you to burn out or go broke doing it. Love the podcast? Make sure to follow and give us a 5-star review. Here is Therapy for Your Money. Hello, everyone, and welcome to Therapy for Your Money. In today's episode, this is a really special one for me because we are joined by two members of the team at Green Oak Accounting. So today we are talking profit first. It's a popular topic, but specifically we are meeting with two coaches in our Profit First Academy today. So we have Carolyn Chrestman and Hannah Dyer. Just to kind of give some background on this, Profit First Academy is our membership group where folks who have read Profit First and now the Profit First for Therapists workbook, on occasion we would have them reach out to us and say, hey, I would love to get more support from your team without necessarily working with us on the accounting side on an ongoing basis. So our solution to that was the Profit First Academy, which is a way that people can come in for just a monthly subscription, super flexible. You can come in, come out kind of as you wish, right? Be in there as long as you need, and then go on your merry way. But within the Profit First Academy, we have kind of additional training on Profit First. I do a monthly Q&A in the group and present on a topic, but then also we have what I think is the biggest, huge advantage of the Profit First Academy, which is office hours. So we hold office hours on a weekly basis, and we have these incredible coaches within the Academy who host office hours. And there's kind of a rotation of different people, all from my team, all who are accountants and know Profit First really, really well, who are there to just kind of get people unstuck. And so on that note, hi, Hannah and Carolyn, welcome to the podcast.
Hi, thanks for having us.
Yeah, thank you for having me.
Yeah, good to have you. So Carolyn, I'm going to throw you the first question. I know that sometimes brand new members of the Academy are a little bit confused as to like, what do we do in office hours? So why don't we start there and then we'll dive into some of the common questions that come up.
Yes, it is very common when I speak to a new member for the first time, they're telling me, I signed up, but I don't really know what I'm supposed to ask you.
Yeah.
And that's fine. Sign up anyway. I always start, just by introducing myself and asking just about your practice. And if you start talking about your practice and how the finances are flowing and how you're feeling about Profit First, then your coach can help you figure out what your current pain point is and how to get to the next step, wherever that pain point is for you. So you don't even have to have a specific question in mind when you come. That's okay.
Yeah, that's amazing. And office hours are 15-minute chunks. So really it's a great like bite size, come in for one question basically, or like just to talk about what's going on. And then you're done. Yeah. So Hannah, what is one of the most common questions that you get within office hours?
I would say my most common question is going to be generally based around typically the account names and how many
Okay.
of them to set up. which can be a struggle for some people
Yeah.
because it's always going to be different based on your practice. But in most cases, you're going to have your revenue, OPEX, payroll, owner's pay, tax, and profit. It's
Hmm.
those core accounts. That's the ones we typically work out of. But people seem to get really hung up on the payroll piece for an owner and which one is going to be owner's pay and which one is going to come out of the payroll account. I have told people in the past if you have to rename that to something else for the owner's pay for a distribution, do what resonates with you best.
Yes. Yeah. So and I get this in our Q&As as well. There's often some confusion on, well, I'm an owner. Do I only get paid from owner's pay? Do I connect my payroll account to two different accounts, right? Kind of the logistics, a lot of the logistics pieces. So is that something that you work through often?
All the time.
All the time? Yeah. Yeah. Like how about, do you often get the question of payroll taxes? Are they coming from the tax account or the payroll account? Like
Yes.
so what is our general recommendation?
General recommendation is that the payroll account is everything payroll related. That includes your payroll taxes. The tax account is what you're paying the big man at the end of the year. That's what the IRS is coming after. That's why we say to
The
vault
big
it.
man.
The
I
big
love
man,
that.
he's coming for you.
Hannah, I always love your fun expressions.
Thank you.
Uh, okay. Yeah. So those are the kinds of questions that we talk through. Do you get questions around like adding additional accounts?
Yes, of course. And there's
Yeah.
often times where that is applicable. Some of us are in positions where we're looking at expanding. And it is good to kind of have that additional savings account that is for those specific goals. Some people might be in debt crisis. And for them, they really, really need the boundary there to say that this is for my debt payment.
Okay.
So there is customization, but the key thing is always tell people you got to have the core accounts. If we're going to have all these branches, you got to have the trunk of the tree. There's nowhere else we can go beyond that first.
Got it. Okay. So start with the basics. At what point do you like to add additional accounts?
One, you got to get used to your system, right?
Okay.
So, like, we don't want to give you too many pieces of the puzzle to play with. You're not going to find your corners and your edges. You're going to be playing with the center. That's not going to work for most people. So, generally for me, I don't recommend additional account until you have gotten almost into the working the system phase is what we call it.
Okay.
So, you're used to doing your weekly transfers. Because for some people, that is going to be overwhelming. You're transferring possibly to 5 different accounts. Let's get very comfortable with the 5 before we add the 6, the 7, and the 8.
Okay. Okay. I love that. Carolyn, what are some of your favorite kind of extra accounts?
I love it when a practice owner can use an extra account to save up for something that maybe only happens once a year and is a relatively significant part of their budget. So that might be maybe you're a sole proprietor and you need to pay your annual liability insurance, and that
Mhm.
can be a good chunk of money. Another good use for it is trainings and conferences. It's very tempting to register for training and conference. You might see the money in your OPEX account, go ahead and register for that conference. And then you realize a couple weeks later that rent is coming too. So setting money aside for conferences and trainings allows you to save a small amount over time and allows you to keep an eye on that specific piece of your budget and know that, okay, when I have $2,000 in that account, I can buy the conference ticket and my plane tickets and everything is covered. And the rest of my practice still has plenty of money to run.
Yeah. Yeah. I love that. There's been a lot of conferences and trainings and retreats and all that. And like it can add up, right? It's not just the tickets to attend, it's all the travel around it. Will your recommendation on additional accounts be different for a larger practice? Let's say like a group practice with 15 clinicians, they might not need a savings account for liability insurance. Like what kind of accounts would they need?
Probably expansion. But in my opinion, if you are going to put less than 2% in a separate little account, it is not worth it.
Okay. I love that, that amount. Yeah. Okay, so if it's just gonna be so itty bitty that it's insignificant, lump it with something else.
Yeah. If you're
Okay.
a large practice, $1 million and you're buying one conference ticket for 2,000, that's actually not a big part of your budget at
Yeah.
all. And
Yeah.
saving for it separately is almost a little overcomplicating the system.
Yeah. But if you're to your point, if you're in solo practice bringing in 60,000 a year, that 2,000 is really significant. Yeah.
Yep.
And that makes sense. Yeah. That's a great point. The scale matters here. What are some of the other big, meaty questions we get in the academy?
I mean, the core question, I think, is people coming with their instant assessment and saying, did I do this right? Yeah. If they're coming with their instant assessment that's blank and saying, I don't know how to do this. Can you tell me? Yes, yes, we can. Absolutely. I love it when members, I usually have them share their screen. They show me the blank instant assessment spreadsheet, and then they show me either their profit and loss or, whatever other documents they have. It's just the member and the coach. It is not an open, Q&A session where there's lots of other people there. It is only two people looking at that screen. So you can feel free to really show your own numbers. We can look at your records and help translate, what number from your profit and loss goes into what box on the instant assessment. And then you'll really know that when you've plugged in all the numbers, this is it, that you've got it. That's your numbers.
Yeah. Yeah. This is so where are some of the spots where people kind of get stuck in that instant assessment or maybe go wrong and need help getting unstuck?
I would say separating payroll from the rest of expenses can be tricky depending on how their financial records look. You might be working with a bookkeeper who is keeping a profit and loss report for you. But the payroll is kind of lumped together with all the other expenses. And it just takes a little bit of outside work with a calculator to look at the total expenses, take out the payroll, and that's all the rest of that is your overhead. Now we have to look at the payroll account and gather some more information about, are any of these staff admin? Is some of this payroll going to you? It just takes a little bit of digging.
Okay. Yeah. Hannah, what do you have to add to that?
It depends. Like definitely the instant assessment is going to be a piece that when people come in, they're typically stuck on. Either stuck on because they're not sure what's going on because it's finances, which is
Mhm.
understandable. They're
Mhm.
therapy practice owners. They didn't go to school like I did to read financials. The other piece too is that a lot of the times, like Carolyn said, it involves looking over their books, which I'm always more than happy to do. And it truly does depend on who's doing your books. And for a lot of people in smaller practices, which I would say is what I see the most of, is solo practice. They're out kind of doing it on their own. I sometimes find that there are minor accounting errors that make a big
Mm.
impact on the final results of the instant assessment. So I like when they bring it with them and they're willing to talk about it because I'm also helping them clean up a couple little things here and there where they might need to think a little harder. Might leave them with a little bit of a little brain worm, a little brain food to kind of walk away with and come back the next time. Yeah,
Yeah,
the
and
instant assessment is the challenge.
like what's something that you might be able to spot pretty quickly on the books, right? So you're an accountant, you're coming at this with your accounting eye. Obviously, in the span of office hours, like we cannot confirm that everything in the financials is accurate, but like there's usually a couple of things that you can point out pretty easily, right? What might some of those be?
The biggest one that I see more often than I like to admit is that I will actually see the payment for a credit card on the
Mhm.
profit and loss,
Okay.
um, which is understandable. I can completely understand from somebody's outside perspective. This looks like an expense when it comes into that bank feed wherever your accounting software is held. You're putting it on the P&L as a credit card payment. Truth be told, that belongs on a totally separate piece of paper that does not impact the P&L, the actual credit card payment. And I've also seen the reverse, where the credit card expenses are being logged on the balance sheet. Not
Mm.
as often, but I have seen it. So then OPEX is understated or overstated, and that can freeze people up because they know they're not spending that much money. So what happened? To me, it's always pretty evident, pretty clear. We expect certain ranges on certain things. So when they're just sky high like that, that's
Yeah.
my immediate trigger. It's too much of an anomaly. It's an outlier. Something's going on.
Yeah. And so in a case like that where the credit card payment is on the profit and loss, that means that expenses are doubled essentially, right? What are
Yes.
typically OPEX, operating expenses? It's double what you expect it to be. So like something feels wrong. Yeah. What are some of the other mistakes you see people make and need help kind of untangling on the instant assessment?
They won't put the historical data.
Okay. Tell me more.
Tell you more, sure. So the instant assessment is not when you're first filling it out, as far as you're filling out your actual historical data, it is what actually happened. It does not care what you think you spent or what you might should have spent. That's not the same. We're looking at what happened in your practice. How much money did you need? How much profit did you make? Sometimes you didn't make any. It's okay. Don't inflate or deflate the numbers to make the final picture look better. Because if our start point is all the way out in left field, I can't help you get to the proper finish line. Our GPS is off before we start it.
Yeah. Yeah. Well, and so you see sometimes some wishful thinking in the instant assessment, right?
Yes.
Like, this is what I wish I was spending on
Yeah.
this. So it might be higher or lower, inflated, maybe owner's pay. We're like, this is what I wish I was paying myself
Yes.
versus what's actually happening. Yeah.
Yes.
Um, Carolyn, what about on the target allocations? How can that get a little tricky?
Yeah. I think that that's an area that is tricky for people starting Profit First, especially if they're using our tools when they look at the column that says taps, right? Thinking about their target, the the industry standards that we provide are a range. And so
Mhm.
choosing where their particular practice should fall in that range is tricky because there's actually not one right answer.
Wouldn't it be
Because it's the
easy if
range,
there was? Yeah.
right? Yeah. So talking through, this is something that, you can talk with your coach about is, looking at this range, where should I fall in that range? And it's going to depend on your own goals. Everything has to add up to 100%. So your goal might be at the top or bottom or middle of the range, and that's okay, as long as it adds up to 100% in the end.
Yeah. And so one of the ways I see that play out sometimes is as the practice owner, you can make decisions on your priorities, right? So we might have a practice owner say, I want to be at the high end of the range for clinical payroll because I want to offer a lot of benefits and that's what I value. And that's okay. That's a decision that anyone, right? No, zero judgment, like great, that's awesome. But you might have you likely will have to be then very efficient or lean in other areas to compensate for that, right? You can't be at the top end of everything or you're going to spend 125%
Yeah.
of what the practice generates. So it's kind of a question of preferences and values. And as you said, there's no right or wrong answer. It's hard because really no two practices are exactly alike. And that's the beautiful thing about it. You can run a business however you want to run it, but that doesn't make it easy to pick.
And your goals can change over time.
Ooh, yeah.
Say
Yeah.
you just opened a new building. Now your rent is a much higher percent than it used to be. And you're going to have to make the percentages in some other areas smaller. That's okay. That might even be temporary and you might change it in the future.
I have also started people instead of focusing on how much do you want to spend in OpEx, how much do you want to spend therapist pay. Ultimately, the philosophy I've tried to adopt is that the business is supposed to fulfill the owner. If you're not fulfilled, if you're not paid, if your take home pay is not going to be where it is at, then ultimately you're not going to get far. You're going to burn out. You're going to be stressed. You're not going to be able to put forth the best you for everybody around you, which doesn't serve you, it doesn't serve your community. So I actually have people do the lifestyle worksheet post actually figuring out your caps. Like, what do you need to pay yourself to be fulfilled? How are we going to get there? And I will start with the taps for the owner's pay piece first and say, okay, if you want to pay yourself this much, this is how much we got left to work with. Here's your boundaries.
Ooh. This is fascinating to me just to realize how much variation there might be between the different coaches, right? Where everyone kind of has their own method of approaching the same situation. And again, neither is right or wrong. It's just different, right? So there is a coach kind of for everyone, in my opinion, in the academy. Okay, so you're reverse engineering from owner's pay, and
Yes.
then I love that. Okay, so where do you go next after owner's pay?
Owners pay generally, because again, I work mostly with people who it's just so low. So for
Okay,
them, the next step is going to be OpEx. We're not even looking at payroll.
Okay.
For the ones with payroll, payroll is your next obligation. A lot of them come in, they've already got clinicians set. How
Yeah.
much do we have to pay them there? What can that range look like? How much flexibility do we have? Generally, I have found that OPEX is the place that we can trim the most to support figuring out where the bleed is at. So I actually start at the tail end of everything from tax and owner's pay and work my way back.
Okay.
That's how I guide people.
Okay. And Carolyn, what is your method?
Yeah, I think that's a good, I like Hannah's method. Think about, you have to start with the end in mind.
Yeah.
Think about
Yeah.
what you need and then, go to OPEX from there.
So it's a really good point. So I'm going to, a little plug for Profit First for Therapists workbook. In the workbook, we actually start with the lifestyle worksheet for that exact reason, right? Because a lot of folks, it was, I think in chapter 8 in Profit First for Therapists, a lot of people just never make it there. And it is really helpful. Knowledge is power, right? To know how much you actually need to make so that you can feel good, right? Because sometimes there's this tendency to say like, oh, well, my business is not sustaining me. But the business never could sometimes give you what you want, right? Because you're not seeing enough clients or there's just not enough session, right? Sometimes it's just incapable of giving you what you want, or sometimes you just need to make a few adjustments. So in the workbook, the lifestyle worksheet comes first, and then we go straight into the instant assessment. All right, we are just about at time. So I want to ask you both. I'll start with you, Hannah. What is something that you wish readers of Profit First knew about the Academy? Like who it can be helpful for or what they can gain from joining the Academy?
I honestly think people should remember like, this is not a shameful environment. Come in, tell us what your issue is. Don't be afraid to say what is good or what is bad. We're not going to view you as a selfish individual. If you say you want to make more money, if anything, I'll celebrate that with you.
Yes.
you know, and come prepared to learn. You're not always, I might not always tell you the direct answer. I might leave you with some knowledge to think about on your own because I also want you to be a good decision maker
Mm,
because Profit First is meant to help you make decisions. So I might not always tell you the exact number sometimes. I might tell you to think about it.
okay. I love that. Carolyn, what about you?
I love it when members use the office hours as an accountability partner. I have people that have been, coming regularly to office hours once a month, once every couple of weeks for a long time. And we'll talk about the issue that happened this week. They might have some homework. Go look at your bank statement. Go talk to your admin, see if there's anything you can cut here. Come back next week and we'll work on the next step together.
Yeah. And I think before we started recording, you mentioned it's okay to sign up for office hours without having a specific topic in mind, right? Like, so where do you start when that happens?
I'll usually just open the conversation, introducing myself and saying, what's on your mind? What do you want to talk about today? And then I just try and listen and help figure out what your next step should be.
Yeah. There's usually a thread somewhere in there to pull on, right? And to kind of go down the rabbit hole together.
Yeah. I might just keep asking some clarifying questions until we come to what might be the crux of what's, causing an issue that week.
Love it. Perfect. Well, thank you both so much for joining me today. It's a pleasure to see you regularly and great to see you on the podcast as well. So thank you. For any of our listeners who are interested in finding out more about the Profit First Academy, you can go to profitfirstfortherapists.com/academy and you'll see the information. You can sign up directly there and get to talk to your own wonderful Profit First coach. Thank you so much.
Thank you.
Thank you.
Thank you so much for joining us today. We'll see you next time. That's it for today's episode of Therapy for Your Money. Catch us on Instagram and Facebook at Therapy for Your Money Podcast. And don't forget to subscribe to Green Oak Accounting on YouTube. Until next time.
The information contained in this podcast represents the host and guest's general opinions and should not be construed as personalized accounting and tax advice. Listeners should consider all facts and circumstances before applying this information and seek appropriate advice from an accountant, financial planner, lawyer, or other professional. Any info provided does not constitute accounting, tax, or legal advice.